So, good morning, Vietnam.
Yes,
We're keeping it. We're keeping
we
it.
have to.
We have to rest in peace, my man. Welcome to the Money Matrix podcast, powered by MBank. I'm Meyer Delau.
Alan Hastings.
This is what we call the weekly roundup.
Yeah.
What happened during the week, and then we have a special edition of the funding of the week that seemed to be the most challenging,
Exciting.
vigorous.
That's right.
So
Yeah,
let my co-host take it over, and then I'll jump in on the funding.
Yeah, I think the big news this week was obviously the tariffs. Trump with the
Yes, it was
the art of the deal. So Trump basically comes in strong this week with the world is unfair to the U.S. We got to start getting our deficit down. We got to start paying our bills somehow. Fair trade agreements everywhere. We need to make this right, that right, whatever. And his big game plan was tariffs. Let's tariff imports from every country. It was like 10% across the board minimum. And then countries that we thought were unfairly targeting the US or imbalanced in some way, they did this mathematical formula to decide how much they're getting tariffed. Special cases like China and I think Taiwan
Canada
as
and
well,
Mexico.
Canada, Mexico, places where we had deficits in goods. I believe they didn't factor in services, but goods where we seem to be getting the short end of the stick, according to the administration. And the market did not react favorably.
China's at 145.
Yeah.
Mexico's at 25, and Canada's at 25.
We'll get back there. So the first thing was the introduction of the tariffs. It was kind of a shock. There was Independence Day. He comes out with a list of every country, XYZ. And the markets kind of fell off a cliff at that point. It was crazy. Following that announcement, I believe on Monday, was it? There was a fake tweet.
Yeah.
There was a fake tweet on X or whatever it is, where some guy tweets out the tariffs are going to be paused 90 days. The government's just using this as a bargaining tool, whatever. And how much did the market gain that day?
$3.5 trillion.
Insane.
And not even in the day, in the hour.
In an hour. And then the government, the White House comes out.
That's
and
market
says,
cap, $3.5 trillion.
Right. Infusion straight in there in an hour. And the government, the White House comes out and they make this big press statement. That's false. That's fake news, whatever. And the market tanks again. How much evaporated in the next hour?
$2.5 trillion.
Insane. So markets were up and down. I think at the Wednesday mark, things were getting a bit too dicey for the administration. And Trump comes out and he says, hey, we're pausing the tariffs 90 days, except on China. And that's where we're getting
and Mexico and Canada.
Right. And basically he says China is the one that we're really targeting here. They upped to originally, I think it was 125%. And then they upped the tariff number again to 145%.
Yeah.
And they're the ones who are really getting kind of like blocked. They're the ones who are on the target list, right? And once he said that the majority of the tariffs are paused, immediately the market shot back up again.
What happened to the bond market?
So
and the mortgage rates.
Yeah, interestingly enough, the bond market and the stock market have an almost inverse relationship. And for this week, they kind of didn't know how to act. The bond market was also up and down. But I think recently, I can pull this up on the screen for you, actually. You can see what happened to the 10-year, which is kind of what we use the most to measure stability here in mortgage rates. This is the 10-year. And this is, let me actually shorten this for you to 3 months. So right here, this date, April 2nd, was Liberation Day, where tariffs come out. And you can see money fled the stock market at a rapid pace.
Well, the red shows the bond market coming down and all the money flowing in.
Right.
So if you look at where did it trade down to, all the way down
these
to
2 days is where the stock market basically tanked.
Yeah, and it went down to like 380, 90, 389, 90, around there.
So stock market goes down, the bond yields also go down. And then once the tariffs were paused, we shoot back up.
Where are we now? 447. This morning we hit as high as like
4.6.
Almost 6, 460, 461.
Yeah.
That's crazy.
That's insane. And
that's 80 basis points.
That's directly tied to our rates, right? And we saw this on Tuesday, Wednesday, Thursday, and today. I think today we actually saw a pause, but rates went up every day.
Yeah, I mean, we didn't raise nearly as much as the conventional
Definitely not as
rates.
much
I
as
mean,
conventional.
conventional rates were up 50, 60 basis points minimum. They almost were in parity to how much it went up. We raised, I mean, we lost probably 3/8 to a half a point.
That's right.
About
Probably
three,
three
yeah,
eighths.
0.375,
Yeah.
which is significantly less than the conventional rates.
Right. Thank God for that. Anyway, the biggest takeaway was, the instability is the problem. It's not specifics. It's not the number of the tariffs. It's not who's getting tariffed. It's just the lack of confidence.
You know what I just heard literally right now on CNBC?
Sure.
Um, the big the big companies and the market as a whole just got some confidence because if you measured the consumer confidence and the company confidence, they were all down to like zero. I mean, it was
Right.
crazy because no one knew it. Again, you said the instability. One thing they just said is apparently Peter Navarro, who was the czar of the tariffs and was the aide, if you will, to Trump. Basically, they put him to the side because he was too much
Really?
and only pushed it. Didn't want to negotiate, didn't want to do anything, and just kept on the tariffs. And they said they put Scott Bassett in to sort of navigate this whole thing with Trump and with the other countries. And Lutkin is going to part of Donald Trump. He's going to be part of the negotiation process to come up with a fair
Trade.
trade.
Yeah.
And ultimately, I mean, I heard something that it was interesting. And again, this is not political in any way because
Sure.
I have no, one way or
Right, right,
another.
right.
I mean, we're in the bond market. We don't make things, we don't manufacture things. But Kevin O'Leary, Mr. Wonderful from the Shark Tank,
Yep.
I saw a clip that he said he thinks tariffs should be 400% on China. And they asked him why. He's like, because China just doesn't play by the same rules. You go in and you manufacture goods and do everything there, and all of a sudden you're going to see it produced by China, and 2 weeks later, and it's out on these different sites, and there's nothing you can do. He's like, I manufacture there, but it's a necessary evil. But there's such an imbalance of what's happening, and I think really they just want to make it fair and equitable, and I think it'll happen. I just, hopefully the confidence and it doesn't go too long where the damage is too prolonged.
Yeah.
And because everyone's talking about recession, Jamie Dimon is talking about recession. Fink from BlackRock's also talking about recession. So you don't know. We'll see what happens.
Yeah. And I wanted to touch base on some good news too. So
I love good news.
yeah, me too. So with the tariffs up, down, in and out, whatever, um, things that we can look on, in a positive light were the CPI numbers and actually
And the PPI
the
numbers,
PPI
both.
numbers as well. And a lot of the,
So just to clarify,
yes,
CPI is Consumer Price Index.
which is what we pay for stuff.
That's what the consumer pays for stuff.
Right.
And PPI is Producer Price Index. That's the wholesale level. What
Correct.
Trader Joe's and Publix and these larger organizations pay for products and thing and what the inflation, and they both
Came in positively. So this
they
is
cooled
fun.
down. So it showed that it
Exactly.
wasn't as inflationary.
CPI dropped 0.1%, which doesn't sound significant. However, this is apparently the first drop in nearly 5 years. In nearly 5 years. That's a full presidential term. First CPI drop. And energy prices were the biggest contribution of the PPI numbers cooling off. So if we're looking at this in a positive way, the big takeaway is that costs have gone down, primarily gas.
I guess eggs.
That's right. And so those numbers that a lot of these things coming into 2025 that people were freaking out about prices for this, prices for that, especially with the Ukraine and Russian war going on, a lot of the hype around gas prices, those things were kind of cooling off. Um, Now, a lot of economic reporting that you see these days is how does the tariff situation impact those numbers? Are we going to see a significant change in April with those things jumping back up? Obviously, when you say tariff, it's the cost to import something goes up, and it's almost like a tax, almost. And if those tariffs are in place and things get more expensive, those numbers may heat up again. And that's why a lot of people are kind of nervous that this is leading into a recession. But if you can look at the markets, it's peaks and valleys very
S&P,
significantly.
that's over the last 5 days.
This is only 5 days, and this is the graph, right? And this is an insane turn of events, basically. So
If you
hopefully,
go over the max, what's the max term there? How long is the max?
so the max term here is going to be about 20, 30 years almost. It's
So
almost
30
30
years. So
years.
if you go to, for example, 2008.
Yep. Let's look at 2008. That's right here
So 2008, before the meltdown,
at the
the
peak.
market was at the peak around 1550, and
Right.
then in 2008 we dropped almost half,
Yeah. The
about
housing
half,
crisis left us
50%.
around 770.
And then since 2008 we had a huge spike, a run, and then that dip again, I guarantee, was COVID. Yep.
Yep. Right at the start of 2020.
So that was COVID. And then again, you went up, and this dip that you came down was because inflation and interest rates started going up and
That's right.
everything started going up. And then the market
Explodes.
explodes. And then this next dip is Liberation Day.
We start actually, the decline starts around February 14th. Not 100% sure. Let me see if I can kind of zoom in on this.
Go back to, no, if you go like 6 months, go to the 6 month, you'll see.
Yeah, we'll see it right here. So at the 6 month look, you can see January it kind of like troughs a little bit. We have February, and then it starts in February. I'm not 100% sure what happened at the end of February. Maybe that's kind of when the talks began.
Yeah, that's when they started talking about it.
And then April 2nd is obviously D-Day, Liberation Day right here.
Yeah. But I mean, if you just look at if you go back to the max again, if you look at the overall trend, though, you're gonna see it's cyclical. And if
Oh,
you
it's definitely
just
cyclical.
take a, I wish you could draw on that, and if you could just do that
Like
line
an average
vertically,
line.
yeah,
Yeah, yeah, yeah.
exactly. You'll see at some point it's gonna balance out, and then it'll kick back up again.
So those were the good news. Is the CPI numbers and the PPI numbers came in good. We also have some other news that kind of went under the radar. I thought it was important to kind of look at stories that weren't as highly reported. We got the Eric Adams news in New York. Interesting stuff there. A couple of judges resigning because of his the charges being dropped against him. We had major banks like Chase. I think there was J.P. Morgan and then Goldman Sachs. A lot of the major banks reported historic gains this week, as in they blew their Q1 numbers out of the water historically.
Just
After
just based on this week's volatility in the trading.
That's exactly right. It turns out the trading yesterday, I mean, volatility is to be expected, but when you're ahead of it a little bit, you can make a lot of money,
Sure.
right? And those
Sure.
people, same banks, very same banks coming out today and saying, "Hey, we might be heading for a recession," made a pretty penny off of yesterday's fun dip. Um, I can't think of anything else unless there's something you wanted to mention this week.
No, I think you pretty much covered everything. And next week we're gonna, sort of see what's happening. You want to check the economic calendar real quick?
Yeah, I can do that. But while I'm checking this, if you want to jump into our Friday funding, was there a deal that you thought was extremely exciting?
Yeah, we work with a lot of investors who buy properties, who are active, and this group happens to be in Florida.
Well, just very briefly, you say we work with, you mean M
M
Bank?
Bank,
Yeah,
yes, M
got it.
Bank. Sorry about that.
Sure.
And they were thinking of going hard money, and the hard money, the rates were 10, 12%, and 2, 3 points, and it just didn't make sense. The numbers weren't penciling. They obviously couldn't qualify conventional. So, he's a friend of mine, one of the investors, and he came and he said, "Listen, I'm buying a group of 6 condominiums in South Florida." And he said, "Listen, our plan is to ultimately stabilize them, get them rented. Some are rented, some are vacant, and he's gonna ultimately rehab one by one as the tenants go out, and then sell them ultimately." And it's probably a 2, 3 year plan. So the condo had no HOA association. The rents that were there were extremely low. We're still able to navigate through the transaction. We financed them at 75%, all debt service coverage, meaning the rents cover the mortgage payment.
Even with
And
those low
yeah,
leases.
even with those low leases, we have a program where we can take up to the 20% difference between the low lease and the market rent. So we're able to utilize that because we knew um, they were gonna increase the rents. So overall, you took a deal that was almost impossible, literally, for most people to transact on.
Yeah.
and we closed it, and the rate was like in the, oh, was it high sevens?
It was, yeah, just over mid sevens.
Yeah. So it's something that completely, and if you priced it out on regular conventional, it was almost 8.5,
Yeah.
because, and also they were non-warrantable condos, so there was no Fannie Mae approval on it. So this was a big win for us this week. The team really did an amazing job. There was pressure closing 6 loans simultaneously.
Oh yeah.
We had to jump through some hoops with challenges with the attorneys, but overall, it was a big win for us and for our clients and our staff, really.
The crazy thing is the previous owners, no HOA,
Yeah, no
good
HOA,
structure that had no HOA.
no nothing. They didn't. It operated like a mom and pop thing,
And
but
those
when
low
you go to
leases,
finance, that all comes out in the wash, and it's like, well, how are we doing this? No HOA, no structure, no insurance on. There was nothing
right. That's
because they owned
mind-boggling.
it free and clear, so they didn't care.
Well, I'm glad you guys, were able to make it work that way because it seems like, these deals are the kinds of things where if it's unable to be underwritten, if it's unable to be properly handled, that's obviously a great property that just falls through the cracks, and it's not the buyer's fault. It was the previous sellers who let this whole thing fall apart. That's crazy.
And really, hats off to our underwriters. I mean, that's where make sense underwriting comes into play. You look at a situation and you have to be able to sort of block out all of the negatives and figure out a way to navigate through to make it work, because they had the money, they had the reserves, they had the down payment, their credit score was great. It's just a matter of making the deal work and understanding the nuances. And that's really very important. A lot of underwriters in the regular world, if you will, are almost line underwriters. They know how to read a DU approval, desktop underwriting approval, it spits it out, they validate, and that's it. Where in the non QM space, your underwriters are actually underwriters because it's all a manual underwrite. Every single underwrite is a manual underwrite. No loan is the same. So you have to look at all the nuances. You have to understand business. You have to understand corporate structure because these were vested in LLCs. You have partners. So there are different factors and facets that are involved. Underwriters need to understand and analyze bank statements, business deposits, cash flow analysis, balance sheets, looking at all of these things that on the face, it doesn't seem like a big deal. But if you really do it, our underwriters are home groomed. They're skilled. They understand. They're our processing team, and you work hand in hand with all of them. And it's for you. It's, I'm sure you see it all the time. It's the level and degree of understanding and knowledge that has to come through. And a lot of times we have to work with title, explaining to them what's going on. We have to navigate and educate all parties throughout the process because they don't understand. They think it's easy. Oh, it's a
Right.
no doc loan.
It pays to be the smartest person in the room. That's for sure. I was just going to show you. Here's your economic calendar. We have nothing crazy coming up, but
You can pick that up off of the MBank website too. You know that.
definitely. What I wanted to see mostly was what kind of numbers and announcements were going to be related
So
to the
retail
tariffs.
sales Wednesday.
Yep.
Keep going. Home builder confidence. That's going to be interesting because now with the tariffs and
That's
the
right.
lumber costs, because he's still tariffing the lumber from Canada.
That's exactly
They're
right.
saying the cost of new construction is going to go higher, and then initial jobless claims and housing starts and building permits also, because that's
Building
for
permits is going to be
the
big
new
as well,
permits is a
houses,
big
yep.
number too, because it's going to show how many new builds we're building.
So next week, the 2 days to really look out for are Wednesday and Thursday, because that's
Yeah.
going to be new constructions, new builds. We're going to see the impacts of those lumber tariffs, etc.
Well, you may. I mean, I don't know if we'll see it because these are historic numbers from the month before.
Got it. So,
But overall, it's just the sentiment is what really we're going to be looking at, because at the end of the day, that's the feeling of, oh, is this going to be okay? Are we going to make it out of the woods? Because you have a lot of these builders that own these lots and are building and everything, and costs are X, and now they're going to be Y, and as they go from one phase to the next phase to the next phase,
yeah,
that all affects their costs.
yeah. Let's hope they're not waiting for the dip. Any other things you wanted to round out
I,
this
th- I
week?
th- I think I think that was a good Friday roundup, and I look forward to next week and our journey for next week.
I look forward to it as well.
Thank you all. Pleasure, and we'll talk soon.